Good morning, everybody. Happy Wednesday. Hope you guys are well. Today is June 21st, 2023. I hope that music sounded a little better than yesterday. I don't know if it was my internet speed or what, but the music came out awful slurred yesterday. Hopefully it sounded a little better this morning. Jerome Powell is at Congress right now, testifying before our benevolent and mighty government overlords. All of them giving speeches and making stupid 15-second sound bites aimed to make you think they care about you. Sneak peek, they don't. But right now, Powell is saying how much he feels our pain and how ongoing rate hikes may be appropriate. This is I'll say it's a hawkish tone. It's not, as my moderator Mish put it this morning, it's not a Jackson Hole moment. He's not going full hawk, but it's definitely a more hawkish tone than some were hoping for. Markets are currently pricing in an 80% likelihood of a 25 basis point rate hike in July coming up at the next FOMC meeting. So if you were on team pause, if you were on team pivot, and you were hoping to get a soundbite out of Powell this morning, you didn't get it, folks. Powell is still taking a hawkish tone. Elsewhere, we have got Bitcoin is flying this morning. Why is Bitcoin flying? Well, in the last 48 hours or so, we have had Blackrock has applied for a Bitcoin ETF. We've had Fidelity, Schwab, and Citadel got together and launched a crypto exchange. And we've had Deutsche Bank apply for a crypto custody agreement or a crypto custodian license. This is all happening as the SEC is currently clearing the playing field of any and all competition. And lo and behold, TradFi is moving right in behind them. It's almost like this was a scripted, pre-coordinated takedown of the cryptocurrency industry so that traditional finance could take it over. Maybe you didn't notice me donning my tinfoil hat there for a minute, but it looks like that's what's going on. Anyways, a lot of Bitcoin investors are front-running what they believe to be a wave of institutional money that will be hitting the space just as soon as regulators finish rubber stamping the applications for all of these big outfits right as they kill all the competition. So people are piling into Bitcoin this morning in anticipation of that. And with that, I have to say thank you to the sponsor of today's live stream, Patriot Gold. Folks, we are talking about central bankers. We're talking about Congress. We're talking about corrupt regulators. And while we're at it, why not throw in some international money launderers who run crooked crypto exchanges? Guys like Changpeng Zhou, Sam Bankman-Fried. And you know what? A great way to protect yourself from all of these crooks who get rich off of targeting innocent people. A great way to protect yourself from them is through the ownership of physical precious metals like gold and silver. And that's why I like Patriot Gold Group. They are a Consumer Affairs top-rated gold and silver-backed IRA dealer for several years in a row now. So go to nsfgold.com. There's a link down below in the description, or call 888-988-5401. and get your free investor's guide today. Of course, don't forget to tell them that nobody sent you. And with that, let's shrink my big melon of a head and let's see what's going on in markets this morning. CNN Fear Greed Index still sitting at 80, folks. This market is still running on extreme greed, even though stocks have pulled back a little bit over these last few days, and I do mean a little bit. We are still deep into greed territory here. It looks like we've got a red candle gapping down this morning in the S&P, currently down 16 points, about a third of 1%, at 4,372. We've got the Dow opened up down 127 points, or 0.37%, at 33,926. And the NASDAQ is down 51 points, or 0.38%, at 13,615. So stocks are taking a break from number go up this morning. We've got the U.S. dollar is about flat right now, up 7 basis points at 102.61. And over in the bond markets, we've got yields are largely higher, especially on the long end today, with the 1 month and a 2 month lagging behind a little bit. The 10-year is yielding 3.77%, up 4 basis points this morning. And the 2-year yield at 4.74, also up 4 basis points this morning. Looking over in the commodity space, it looks like the price smash continues in metals. We've got gold is only down a little bit this morning, down $7.65 or 0.39%, trading at $1,940. But check out my favorite of the shinies. Look at silver getting bludgeoned again down 39 cents or 1.68% this morning. And we've got a 22 handle in silver for the first time in a while, currently trading at $22.85. So metal is getting smashed right at the open again. That's 2 days in a row now. WTI crude is up 33 cents or 0.46%, trading at 71.50. And we got natural gas is up a penny at $2.50. But here is your main story this morning. Fed's Powell says higher interest rates needed to curb inflation. Says the timing of moves will be decided meeting by meeting, and a period of below-trend growth is likely needed. And, well, folks, a period of below-trend growth, that sounds awful lot like, well, a recession, doesn't it? A period of below-trend growth or negative growth. But didn't he tell us the recession thing wasn't going to happen and the soft landing and he feels our pain? What happened, Jay? Interesting that he would mention that. Federal Reserve Chair Jerome Powell said policymakers expect interest rates will need to move higher to reduce U.S. growth to below its long-term trend and contain price pressures, with the timing of additional increases based on incoming data. And I just love, he always starts every speech this way. He tries to make himself seem like just a regular guy. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back to our 2% goal. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity, inflation, as well as the balance of risks. Now, this was a little interesting. He said nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. Nearly all, so it's not unanimous. You got at least one holdout, maybe a few on the FOMC who are saying we're done here, but most are still saying, nearly all are still saying more rate hikes. And they're saying it may be appropriate to raise them somewhat further. So only small hikes from here on out. I think the 50s and the 75s were probably done, at least for now, barring some unexpected surge in inflation coming back. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. And again, below-trend growth, that's a nice way of saying recession, and some softening of labor market conditions, that's a nice way of saying some of you poor plebs are just going to have to give up your jobs in order to stave off the inflation that I caused with my money printer. How do you like that? But remember, he feels your pain. He's acutely aware, so don't worry. He's got you covered. He also went on to talk about in determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, we will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. So he's got a couple of things. The cumulative tightening of policy. He knows that this 500 basis points of rate hikes over the last year has been historically unprecedented other than the 1970s. So he's aware that what they've done is very significant. He's talking about the lag, which means he's aware that the full effects of those rate hikes have not yet been felt by the market. Again, he's very nervous watching that first birthday of that first 75 basis point rate hike coming up, because a lot of bad stuff happened when the first 25 basis point and the first 50 basis point hikes turn 1 year old. So we'll see what happens when those 75 bip hikes turn a year old. And he also said economic and financial developments, meaning if banks keep failing, we might have to ease off. And lastly, he said the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. So he's just leaving himself an out here saying, look, we know things, there's headwinds, there's things that could go wrong. And so we don't know how bad it's going to get. We reserve the right to do whatever we want, whenever we want. And our forecasts are only worth so much toilet paper. It's basically what he said there. Shifting gears for a minute, check out Bitcoin this morning. Let's get us a little more, here we go, a little more of a recent chart. Look at that green candle up this morning. Bitcoin trading over 29,000 right now at $29,102. Bitcoin is absolutely flying on this news. And what news? Well, let's just hear a couple. Keep in mind, all this has happened within the last couple days. Bitcoin bonanza on tap if Blackrock ETF is approved. Grayscale owners could see double benefit, and Coinbase would get a shot in the arm. Now, to be honest with you, it really seems like Wall Street Journal here is trying to make the sales pitch on BlackRock's behalf. And I would never insinuate that traditional finance is in bed with the financial press. I would never make an accusation like that. I'm just saying the appearance does appear to be there this morning. The world's largest asset manager could be a lifeline for crypto and spark a windfall for some traders. Yeah, it could also be a death sentence for crypto, and the whole reason cryptocurrency exists to begin with was because the traditional finance system was run by crooks who couldn't help themselves. And no, Satoshi didn't write the white paper because he was hoping one day the world's biggest asset manager would swoop in and buy up all the Bitcoin. That was not what Satoshi had in mind. At least I don't know the guy or the guys or they or them or whoever they are. Betting that BlackRock's filing for an exchange-traded Bitcoin fund gets approved might be foolhardy given that the black box of regulators thinking, but a nod would be an electric effect on the besieged asset class if it were to happen. Now, they're going on to mention that the discount to net asset value for the Grayscale Bitcoin Trust is already shrinking. If you're not familiar with the Grayscale Bitcoin Trust, they're the biggest holder of Bitcoin in the world, but it's a trust, not an ETF, so there's no arbitrage opportunity. And Grayscale is owned by Digital Currency Group, who is going through all kinds of bankruptcy problems. So the Grayscale Trust has no redemption mechanism, and they've applied to become an ETF. The SEC has blocked them time and time again. BlackRock coming in and applying for Bitcoin ETF appears to have people somewhat optimistic about Grayscale's prospects because the discount to net asset value for GBTC has gone from 44% a few days ago to just 34% right now. So we're starting to see that gap close on this news. Now, one notable difference here, BlackRock's application has at least one notable addition, an expected agreement to share surveillance of a spot Bitcoin trading platform with the NASDAQ, which would list the ETF according to a regulatory filing. In other words, the exchange could get confidential information on buyers, sellers, and prices. Potential manipulation of the price of spot Bitcoin is a big reason why the SEC has rejected Bitcoin ETF applications so far. If that surveillance sharing platform were Coinbase Global, it may be significant because Coinbase is among the exchanges whose prices inform the CME CF Bitcoin reference rate, which is what would be used by BlackRock's ETF. I'll be honest with you, Coinbase Global, I mean, maybe that's a different business outfit, but it's still under the Coinbase umbrella. The SEC is suing Coinbase. So if you think the reason why the SEC might approve the BlackRock ETF is because they're doing business with Coinbase Global, well, the SEC is already going after Coinbase. Hey, they'll get approved because BlackRock, folk. Let's be honest here. They'll get approved because BlackRock. But BlackRock is not the only one. Check this one out. Crypto exchange backed by Fidelity, Schwab, and Citadel launches with additional investors. Oh, look, it's a who's who of the people who took away the buy button during the meme stock craze. Remember the people who screwed over AMC and GME owners when they made it so you could only sell those stocks on their platform and nobody went to jail? Yeah, those guys are waltzing in and setting up a crypto exchange, because we can totally trust them. Ken Griffin, he's a regular guy. EDX Markets has a different business model than other crypto exchanges, which regulators like. Its CEO, Jamil Nazarali, told CoinDesk in an interview in April. EDX Markets, which is backed by Fidelity, Charles Schwab, and Citadel, has launched in the U.S. after building out its technology for the past 9 months, the company announced on Tuesday. Allow me to reiterate, because I feel like you're not taking the walk with me. For the past 9 months, they've been building out their technology. Gee, guys, it's almost like the regulators targeting all of the competition have coordinated their efforts with the launches of all of these other TradFi platforms. It's almost like this is a scripted takeover of cryptocurrency by regulators and financial insiders and corrupt government officials. It's almost like everything Bitcoin was created to fight against. If you're looking at this rally in Bitcoin prices and you're like, oh yeah, I hope they do it, Bitcoin number go up, you're missing the whole point here, guys. This is not a good thing for Bitcoin. This is Larry Fink and his stupid unicorns and rainbow cronies trying to take over Bitcoin so they can make it do what they want for their benefit using your money to achieve that desired result. This is not good for the space. I'm proud to announce that EDX Markets has successfully launched our digital asset market and completed an investment round with new equity partners. Where is it here? There's one thing that separates EDX Markets from other crypto exchanges is that it doesn't custody customers' digital assets. Instead, users will have to go through financial intermediaries to buy and sell crypto assets, similar to how trades are executed on the New York Stock Exchange or the NASDAQ, because we know fraud never happens on the New York Stock Exchange or the NASDAQ, so it's totally cool. Regulators like the different approach, Nasralli said, because they think it's important that there's separation between the exchange function and the broker-dealer function. Okay, so they're not going to actually custody the crypto on the exchange. It's funny you should mention that because just 2 days ago or just yesterday, Deutsche Bank seeks crypto custody license approval in Germany. So it's almost like, oh, we've got that base covered also because the biggest bank in Europe, or one of the biggest banks in Europe, they're going to be a crypto custodian. Again, this has nothing to do with coordinated regulatory crackdowns on all the competition. Just tinfoil hatting here, folks. It's just a tinfoil hat. So look, this is, again, I'm tinfoil hatting here, folks. Any way you look at it, this is a scripted takeover of cryptocurrency by regulators and traditional finance. It's happening at a time when central bankers and government officials have already destroyed fiat. They've already made that classic mistake of printing money and causing inflation, and now they're putting people out of work to try to fight the inflation that they caused. And one of the exit ramps to escape what they have done to the traditional finance system has been Bitcoin. It's been one of the ways to unbank yourself, and they're trying to take away that option. Now, they can't kill Bitcoin, but they can break the off-ramps, they can blow up all the bridges, and then they can control enough Bitcoin through these new exchanges using our money to do it that they could essentially deny people that freedom. So don't let this surge to 29,000 in Bitcoin fool you. What's happening right now is not a good thing for the space. And I just want to say thank you very much to Mr. Jesse B. for your super chat, sir, the support of the channel. He says Bitcoins are not accumulated during this pump. Miners are selling. Interesting. So who's doing the buying? If the miners are selling, who's doing the buying? Somebody is front-running these ETFs right now. It's not miners. Who could it be? Thank you, Jesse B. I appreciate that very much, sir. Thank you for the super chat and the support of the channel. Also, thank you to my Patreon supporters for everything you guys do for the channel. Looking forward to talking to you guys at 5 p.m. Eastern Time today for our weekly get-together on Zoom. There's a link down below should you feel so inclined. Right next to that link to Patriot Gold. Thank you, Patriot Gold, for sponsoring this live stream. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.